In today's volatile market, are you prepared to navigate the uncertainty?
Absolutely. We're diving into insights from top analysts like Danielle DiMartino Booth, Wendy, and David Lin, who have explored these current events in depth.
And the best part? We've distilled their critical insights into easy-to-digest, AI-powered summaries.
Stay tuned as we uncover essential takeaways from discussions on the government shutdown, market crashes, and the rise of gold.
Let's get started by hearing what Danielle has to say about the impact of potential government shutdowns on the market. Today, we're discussing the possible repercussions of a government shutdown through insights from Danielle DiMartino Booth.
Danielle provides valuable viewpoints on how such a shutdown could influence investor behavior and market trends.
Danielle DiMartino Booth points out that government shutdowns create a significant level of uncertainty, which financial markets typically react negatively to.
According to her insights, this uncertainty is likely to encourage a more cautious stance among investors, which could affect market movements.
Danielle emphasizes that the fear of a shutdown often leads investors to take a more defensive approach with their investments.
This shift in sentiment can slow down any potential recovery in the markets.
She also comments that disruptions in government operations may postpone significant policy decisions.
These postponements could negatively affect economic stability and growth forecasts. Danielle suggests that investors reconsider their strategies amid ongoing uncertainties.
She advocates for diversification as an effective way to reduce potential risks during unstable times. What are Danielle's market predictions if a shutdown takes place?
She predicts heightened short-term volatility, especially if a shutdown is prolonged.
And what about long-term effects?
Her analysis indicates that long-term recovery could be significantly affected by the outcomes of any fiscal policies passed after a shutdown.
In conclusion, Danielle highlights the need to stay updated on any shifts in fiscal policy.
Such awareness is critical for investors contemplating their next moves.
Customizing investment strategies based on economic trends is key to maneuvering through emerging uncertainties.
Certainly, the changing political environment will have significant implications for financial markets.
Today, we're unpacking Wendy's critical analysis of the current economy shared on Eurodollar University.
Wendy outlines concerning trends that indicate possible economic challenges ahead.
Wendy stresses the critical necessity to closely monitor various economic indicators that may signal a downturn.
She argues that understanding these signals is essential for investors looking to safeguard their assets.
Wendy identifies stock market volatility as a key indicator of potential economic weakness.
Such volatility reflects uncertainty among investors who are cautious about future developments. Wendy warns that increased financial pressures could compel consumers to cut back on spending.
This loss of confidence can ultimately hinder growth if the trend continues. What economic trends does Wendy foresee unfolding?
Wendy predicts that persistent current trends may lead to significant economic downturns. Wendy emphasizes the necessity for strategic actions from both investors and policymakers.
She suggests that investors should think about diversifying their portfolios to reduce risks.
Additionally, she insists that policymakers must implement decisive measures to stabilize the economy.
Today's session focuses on the market dynamics in light of sellers' inability to control the market.
Analysts highlight how buyers have stepped in at key structural levels.
The analysts at Trade Brigade emphasize buyers' critical response as sellers couldn't maintain control.
They specifically mention key support levels that traders should observe closely.
The importance of monitoring technical levels is a major discussion point.
Specific resistance levels where profit-taking may occur are highlighted. Analysts discuss sectors with substantial buyer activity indicating a rotation.
This strength in sectors offers traders insights on focusing their strategies. The Trade Brigade encourages traders to stay observant as market sentiments evolve.
Flexibility is essential, given that volatility could disrupt trading plans.
To summarize, traders should keep a close eye on buyer strength to assess market sentiment.
Identifying resilient sectors is key in forming effective trading strategies moving forward.
Today, we're examining the fallout from the collapse of two hedge funds heavily invested in the subprime market.
David highlights that this could significantly affect investor confidence and financial market stability.
David Lin points out that high leverage in these funds amplified their risk exposure.
He warns that volatile markets can lead to catastrophic losses for leveraged positions.
What does David Lin say about the impact on the market?
He notes that the collapse could trigger panic selling across financial markets.
David mentions that declines in investor sentiment might follow these events.
Such reactions could drive investors towards safer investment options.
What predictions does David Lin make regarding future hedge fund operations?
David foresees increased regulation and scrutiny for hedge funds after these collapses.
David Lin concludes that high-leverage strategies pose risks that investors should be cautious about.
He recommends diversifying portfolios to manage risks related to volatility.
We're diving into an analysis by Aaron Dishner regarding the recent surge in gold prices and its implications.
He emphasizes that gold is becoming the preferred choice for safe haven assets over cryptocurrencies.
Aaron Dishner notes that gold is reclaiming its status as a safe haven amid economic uncertainty.
He comments on the declining sentiment towards cryptocurrencies. Aaron indicates that rising interest in gold coincides with market volatility as investors seek stability.
Is this a trend we can expect to continue?
Historically, gold has been the asset for protection against economic downturns.
Aaron's insights into investor trends highlight a shift away from cryptocurrencies.
What are the factors influencing this skepticism?
It's largely due to increasing regulations and market volatility, making gold a safer investment.
What does Aaron expect for the future of gold prices?
Aaron predicts a continued rise in gold prices as investors seek stability, whereas cryptocurrencies may struggle unless their market fundamentals change.
Aaron Dishner advises investors to assess their portfolios, suggesting increased allocations to gold.
He also recommends monitoring regulatory developments regarding cryptocurrencies as they can impact market sentiment.
Welcome. We're discussing insights from Emily Brown on current trends in stocks, gold, and oil, partnered with David Lin.
Emily underscores volatility in these markets and its implications for astute investors.
Emily points out that stocks may be correcting due to inflation worries.
David aligns with this viewpoint, considering recent financial market shifts. Emily mentions that gold continues to be a reliable safe haven for investors.
She elaborates on how oil prices are shaped by geopolitical tensions and supply chain factors. What insights does Emily share about inflation's influence on stocks?
Emily states that increasing inflation could result in stock corrections due to rising valuations.
What is Emily's perspective on gold in the current market?
According to Emily, gold is a vital safe haven amidst rising uncertainty in equity markets.
Can you detail Emily's views on the oil market?
Emily notes that geopolitical tensions critically impact oil supply and pricing dynamics.
What are Emily's predictions for the equity markets this year?
Emily predicts potential corrections in the stock market, estimating a drop of 10 to 15% as the economy adjusts.
And what about gold?
She expects gold prices to rise further as instability within markets continues.
Emily advises investors on diversifying their asset allocations, considering rising market volatility.
She stresses monitoring inflation trends to craft informed investment strategies.
Both Emily and David conclude that a proactive investment strategy will navigate these uncertain times effectively. Wow, that was quite the deep dive into the world of finance.
Indeed. Our guests today, each with their unique angles, highlighted some pressing issues.
Emily Brown made it clear that inflation is not just a buzzword, it's reshaping our market landscape.
Right. And Aaron Dishner compared gold's resurgence to the volatile crypto scene. Definitely a hot topic.
Plus, we heard from David Lin about how hedge funds collapsing could ripple through markets.
And Wendy's perspective on economic downturns really underscores the importance of preparedness.
Absolutely. Danielle DiMartino Booth and the market analysts also pointed out the delicate balance in buyer-seller dynamics.
But let's not forget the disagreements. They really sparked some thought-provoking angles.
Exactly, like the differing views on gold versus crypto. What a debate.
And Wendy's long-term caution versus a more immediate focus from others brings a lot to consider.
For all of you watching, if you found these insights valuable, don't just sit on them. Like, subscribe, and share.
That way, we can keep bringing you expert analyses that help you stay ahead.
And trust me, you won't want to miss our next video focusing on global trade dynamics.
Thanks for tuning in, everyone. Until next time.